very kindly. Distinguished members of the Cabinet of the Commonwealth of the Bahamas, members of the Board of Directors of the Chamber of Commerce of the Bahamas, and distinguished ladies and gentlemen, an certain tension in the room. Relax. Let me begin therefore by observing the proper spirit by saying that if there are those of you who have any correct queries as to why you find myself now so often in the Bahamas, it has nothing to do with anything sand in the shoes. I'm here purely for purposes of duty, but I am open to having something sand put in my shoes if it would cause these obligations of duty to be transformed into obligations for pleasure. And secondly, the politician being seen this large crowd feels compelled to say that I recently led a party to a narrow defeat in an election where only a few hundred votes made a difference as to whether I was going to lead the country or not. And given the size of this turnout today, I can understand that the reasons for our electoral defeat is that I did not invite the Chamber of Commerce of the Bahamas to organize our meetings for us to get turnout of this nature. And I'm saying all of that to let you know that I'm really very delighted to be here, although Barry, give me a little better notice the next time if you really do want me to give a substantive presentation. So if there are any defects in the presentation, it is Barry's fault. So here goes. In my recent address, as part of the celebration of Bahamas' 40th anniversary of independence, I called attention to the fact that the environment within which the development of Caribbean societies takes place has been subject to dramatic transformation. It further stated that countries which failed or showed themselves as being too slow to adapt to the changed environment run the risk of falling behind in the race to development and at worst of becoming failed societies. This address today draws upon that perspective in offering an opinion on the likely impact of the introduction of a value-added tax on the Commonwealth of the Bahamas. And while the focus will be on issues related to the possible impact of a value-added tax, it was saying that justice can only be done to this subject if it is discussed within the context of a broader and an interrelated set of issues. And that broader context, that interrelated set of issues, was set out with wonderful clarity in an article by Gabrielle Frazier at the 2001 conference of the Caribbean Center for Monetary Studies. The article entitled, "Can Stafford Sam's Model of the Bahamas Economy Survive Today's Global Economy?" To be sure, the global economy within which Bahamas now has to operate is remarkably different from that which obtained when many of the structural and institutional characteristics which made up the Bahamas model were put in place in the late 1940s. Your Bahamas now has to find its way in a globalized economy, which is governed in large measure by a body of international trade law, which has been devised to give effect to a number of specific principles. Among these is the principle that countries should, as far as possible, reduce protection to domestic industries by reducing tariffs and removing other barriers to trade. Another important principle of current law that was not there in 1947 is one that requires that tariffs and economic policies and regulations should be applied without discrimination among countries. What you do to one, you don't have to do to all. Of special interest to the Bahamas must be the new National Treatment Rule and International Trade Law, which prohibits the application of domestic taxes and regulations which discriminate between domestic and imported products and enterprises, the so-called National Treatment Rule. Such rules are now enforced and are enforceable by an international institution, the WTO, which has mechanisms for the settlement of disputes and for the enforcement of penalties when countries are in breach of the rules. These conditions were not there when Sir Stafford put the contemporary structure of the Bahamian economy in place. Bahamas is now the only country in the Western Hemisphere which is not a member of the World Trade Organization. As such, for countries whose economic activities and performance are influenced to an extraordinary degree by its participation in the global economic arena, it is inconceivable that the Bahamas will be able to indefinitely maintain this odd man out status where relating to a rules-based international economy is concerned. The relevant issue, therefore, is not that of whether Bahamas should become a member of the WTO. It is that as to how best the nation should prepare for and negotiate the terms of its participation in this critical institution, and how it should do so while giving equal priority to the other reforms that the forging of such a relationship with the WTO and the global economy will be sure to trigger. The introduction and the possible impact of a VAT in the Bahamas have therefore, in my judgment, to be discussed in that broader context. It has to be viewed as an essential part of the broader suite of economic reforms which have been undertaken and implemented as a single coherent undertaking. In offering this broader framework, I do not seek to minimize the purely fiscal issues which have to be addressed in the analysis of the proposals to introduce a value-added tax in the Bahamas. In fact, the introduction of a value-added tax can be viewed as a necessary response to an evolving fiscal situation which derives from Bahamas' special domestic circumstances. This country has a very narrow tax base that allows it to compete effectively with territories in your immediate neighborhood which are still colonies of Britain and which have economic structures similar to that of the Bahamas, through a tax structure to take a colony. However, unlike your neighbors, Bahamas is evolving a pattern of expenditure associated with its assumption of all of the obligations of nationhood. This is beginning to be reflected in the emergence of fiscal deficits and the growth of your public debt. Among these, although these at present are within international norms of acceptability, the deficits and debt, their projected trajectory is such that fiscal reform is required now to ensure that Bahamas does not eventually have to contend with the kind of fiscal challenges that are currently bedeviling so many of its neighbors in Caribbean. This must constitute part of the rationale for fiscal reform, including a VAT in the Bahamas. The introduction of a value-added tax in the Bahamas, no matter how well intended or designed it is, will be sure to generate its own controversy, largely because it will bring into the tax net activities that are not now subject to indirect taxes. Indeed, the 1774 statement of Edmund Burke continues to be true, and I quote, "It is not given to men to tax and to please, no more than to love and to be wise. If I can, however, be allowed to draw upon the Barbadian experience, I would judge that the successful introduction of a value-added tax is not beyond the capacity of the government and the people of the Bahamas. For a VAT was introduced in Barbados under more challenging circumstances than those currently facing you in the Bahamas, as you contemplate its introduction here. First, the VAT was introduced in 1997, at the same time as Barbados started to apply the program of trade liberalization, reduction in duties, which had been agreed to when it acceded to membership of the WTO in 1994. Its introduction also coincided with the implementation of our obligations as part of the Caribbean Single Market Assembly Agreement to reduce our extraditional tariffs from a high of 45% to 20%. It coincided with the OECD Harmful Goods Initiative, threat to the functioning of our international business and financial sector that helped to reduce the growth prospects of our economy at the same time. Above all, the scale of fiscal adjustment that was intended to be accomplished with the move to VAT by Barbados far exceeded that now intended in the Bahamas. In Barbados, the VAT was used to replace 11 forms of indirect tax and 44 kinds of fees as a means of raising revenue. Despite the challenges, the IMF publication, The Modern VAT, in evaluating the performance of the VAT in small countries, at page 168, cites Barbados as a success story. On the face of it, the proposal set out in the government of Bahamas' white paper, a VAT within a reformed tax system, on the face of it, on balance suggests that this country is giving itself a reasonable chance to successfully introduce the value-added tax. Indeed, the design features proposed for your VAT and the purposes it is intended to serve meet best standards and best practices to be found in a VAT across a wide range of countries in which such a tax is now the major form of taxation. First, the VAT is intended to be a broad-based tax levied at multiple stages of production, with the crucial, essential feature that taxes on inputs to be credited against taxes on output. It is in that capacity intended to be designed to ensure that the final base of the tax is consumption. In this regard, deliberate provision is being made to shield export and investments in the Bahamas from the incidence of the VAT in a bid to use it as elsewhere as an instrument to promote greater efficiency and greater competitiveness in your domestic economy. In conformity with best practice elsewhere, there is also a clear commitment in your white paper to use the invoice credit method, which would both help to discourage fraudulent reporting for tax purposes and, more importantly, to more deeply embed proper accounting practices as a widespread feature of the business community in this country. The concepts of exempt supplies and zero rating, which are intended to be applied in the Bahamas, are also in keeping with the ordinary and widespread meaning of the terms as applied to the tax regime internationally. So too is the proposal to set a sales threshold to exclude much of the genuinely small business of the Bahamas from the incidence of a new VAT. Among its design features, there seem to be the intention to provide the VAT with a broad base, since it is intended provision for only a very narrow range of zero-rated and exempt supplies. Another important proposed design feature is for a standard rate of 15% and a lower rate of 10% for the tourism industry, with a view to making the tax easy to administer, while at the same time enabling it to benefit the leading sector of your economy. In addition, some of the purposes that clearly seem to have motivated the proposal to introduce a value-added tax, such as the prevention of cascading that comes from the present system where you have a tax on a tax. These are given, that motivation is given expression in the proposed design of the VAT, and such a motivation is to be found everywhere in the world where VAT is applied. In the case of the Bahamas, there is a very special issue that has to be explicitly taken into account in the design of your VAT. Like the VAT elsewhere, it has for purposes of administration to have a relatively simple structure, only 2 rates, few exemptions, and a relatively high threshold. It is also intended to replace a tax regime characterized by very high rates of import duties. There is at the same time no intention to introduce taxes on income or corporation as exists in other jurisdictions in the Caribbean. The resulting new tax regime will therefore only succeed in generating an equivalent amount of revenue to that which it faces if great care is first given and taken to accurately estimate, and then even greater care is exercised in maintaining the proposed broad base of the tax. To be precise, the introduction of the VAT in the Bahamas will broaden the tax base, particularly and especially by bringing a number of activities, especially services, into the tax net. But insofar as income and profits will continue to be free of taxes, the overall tax base against which revenue will continue to be raised in the Bahamas will be smaller in relative terms than that of other Caribbean countries which have a VAT as well as taxes on personal incomes and profits. The proposed rate of the VAT in the Bahamas will, however, be the same rate as that in other Caribbean countries which have other alternative major means of raising revenue. With the proposed lowering of the rate of import duties, a VAT at the standard rate of 15%, the same as the Caribbean, will only serve its revenue generating objectives if discipline is exercised to maintain that base that the VAT is intended to begin with. The size of the base will be such a critical determinant of the eventual impact of the VAT in the Bahamas that 2 essential actions need to be carried out before the new tax is introduced. The first relates to the need for the conduct of appropriate studies and simulations to gauge and to measure the proposed base and to derive estimates of the likely impact of the proposed design features of the new tax on prices, revenues, and the productive sectors in this economy. The Barbadian experience emphasizes that this necessary research is a vital first step which must be mastered to ensure that the best decisions about the design features of the new tax are made on the basis of the very best information. Initially, decisions were intended to be made in Barbados regarding the VAT based on 2 reports of 1992 and 1993, which were basically baseline studies and which proposed a tax with a single rate of 15% to replace the taxes about to be abolished. On coming to office in 1994, the administration had decided to defer the date for the implementation of the VAT to enable a more intensive study to be undertaken to simulate the VAT scientifically and empirically, and to derive better estimates of its likely impact on the productive sectors, prices, and government revenues. The scope of the research that had to be undertaken in both the public and the private sector in Barbados proved to be formidable. The research, however, yielded the empirical evidence which supported the structure and the design of the VAT that was eventually introduced in 1997. And that VAT in 1997 had a structure that was different from the one proposed to be introduced in 1995. Is sometimes could make ways. Secondly, the successful introduction and operation of a value-added tax require high levels of compliance. To deal with this, a very special challenge had to be recognized and mastered in Barbados and in the Bahamas. The challenge is that the VAT is intended to simplify the tax system, but the VAT itself is a complex tax to design and to administer. So you want to have a simple tax system, but the VAT itself, by its nature, is complex. To address this challenge, no effort should be spared to design and to have in place a fully competent VAT implementation unit before the VAT itself is introduced. In addition, the most comprehensive public relations outreach program has to be undertaken to address the specific and the legitimate concerns of the main target shareholders and to solicit and to secure their support for an initiatives which carry its own intrinsic complications. People will be afraid of the fact, and they will need to be told precisely what it is about. And you must have a public education program that addresses the legitimate concerns of all of the stakeholders and relieve them of all of the sense of terror that this initiative is likely to inspire. The drafting of the legislation for the VAT has also to draw from best practice. In particular, drafts have to be made the subject of extensive discussion and refinement, and the legitimate concerns of stakeholders have to be embraced and reflected in the bill to be presented to Parliament to secure a strong stakeholders' sense of ownership of the new tax. A systematic effort also has to be made to deal in a sensitive way with the registration of those liable to pay the tax and to iron out the transitional problems which are sure to arise as one tax regime is replaced by another. One major transitional issue which is sure to, is that will concern the procedures that are put in place to enable businesses to manage inventories as one regime is replaced by another. In Barbados, our inventories were subject to consumption tax and then subject to a VAT. And of course, you will have a significant spike initially in the VAT if you don't put sensible transitional arrangements in place to make sure that the same good does not become subject to two taxes. The use of bonded warehousing arrangements, I believe, is something that you must utilize, or better still, make sure that the VAT is implemented at the time the stocks are low. The point with all this is that no matter how sound may be the reasons for the introduction of a VAT, and no matter how perfect its conceptual features are in design, the success of the new tax will depend on the strength and the sensitivity surrounding the planning and the administration of its introduction. In the Bahamas, as elsewhere, where the introduction of a VAT is accompanied by the abolition of a number of pre-existing taxes and the reduction of the rates of some that are allowed to remain in place, I cannot overemphasize how important it is to establish and prove the base of tax before any adjustments are made. A VAT on a large base that yields more revenue than required can be adjusted downwards and right-sized. But it is almost politically impossible to start with too narrow a base and to hope thereafter to expand it. The case of Barbados and Belize is very instructive in this regard, since the two countries introduced a VAT at virtually the same time. The government of Belize started with a tax with a base characterized by many exceptions. It could not meet the revenue or other requirements of the tax. The subsequent effort by the government to broaden the base by reducing the number of exemptions brought the VAT into disrepute and led to its abolition. It also caused the government to lose the election too. I'm not saying this in a political sense, but when they were doing that, they lose the election. I introduced a value-added tax in Barbados. And then went on to win by the biggest margin in the history of the country. So it seemed like we introduced a value-added tax every time on the public face it goes. In the case of Barbados, we started with as broad a base as possible, and I gave the commitment to the public to review the tax after sufficient empirical evidence existed that the tax could get the job done in relation to the raising of the revenue and in respect of the other beneficial effects on the Barbados economy it was intended to introduce. The VAT in Barbados was intended to yield the same revenue as the taxes it replaced, it yielded significantly, about $200 million more. Its yield and buoyancy having been established and verified, the fine-tuning of its base was subsequently undertaken. Policymakers in the Bahamas will have to contend with and to deal successfully with a number of other issues relating to the incidence and the effects of a VAT. First, a properly designed VAT is intended to be a tax on consumption and to bring into the tax net a number of services and hence new taxpayers who hitherto were not liable to tax. The case will be put that the relative burden of the tax will fall more heavily on the poor or those at the lower end of the income scale. The argument is therefore certain to be advanced that the tax is regressive in its effect and incidence, and that features we built into its rate and base to offset any pain it inflicts on the disadvantaged and the genuinely poor. Experience has however shown that it is very difficult, almost impossible, to address issues concerning the effects of the VAT on the poor by building special discriminatory features into the structure of the tax itself. It is better to collect the tax and then subsequently distribute part of its proceeds through carefully targeted support programs to the poor and disadvantaged to whom you wish to reach. A number of special measures were used in Barbados to accomplish this aim. First, on the introduction of a value-added tax, my government also introduced a new reverse tax credit. This new credit enabled persons below a specific income tax threshold to receive, on application, a tax refund even though they were not paying income tax. By this means, it was possible to refund part of the VAT to the poor. Secondly, a new poverty eradication fund was created in Barbados at the same time the VAT was created, and was annually capitalized from the proceeds of the VAT to deal with poverty at the individual level. Next, Next, a new social enterprise investment fund was also established and capitalized to support the creation and operation of enterprises at the community level. The opportunity was also grasped in Barbados on the introduction of the VAT to amend the income tax regime by increasing the threshold below which tax is payable and by increasing the range of concessions and incentives to spur savings and investment by both the private sector and individual taxpayers in our country. Indeed, as a result of the buoyancy of the yield for the VAT, it was possible in Barbados to reduce our corporation tax rate from 40% to 25% and to introduce an even lower rate of tax, 12.5%, on the small business sector of our country. The design and the implementation of VAT must also be undertaken in a manner that enables the leading sectors of the economy to lead and to ensure that the VAT helps to create conditions for the economy to grow. In the case of Barbados, this was accomplished in part by applying a special concessionary rate of 7.5% to the tourism and hospitality industry at a cost of $7 million to the Treasury. The offshore and business sectors were treated as the export sectors they are and were the beneficiaries of the zero rating on their inputs under the 3rd schedule of our VAT Act. The domestic financial sector was accorded the status of an exempt supplier since, of course, the output of the financial intermediary sector output is savings and investments, and the intention of the VAT is to tax consumption. As said earlier, the purpose behind the introduction of VAT is to evolve a tax regime which features a broader base with lower rates of taxes than those which it replaces. The experience, however, is that such a worthwhile intention is frustrated by the subsequent practice of raising the base of the VAT by the introduction of a number of exemptions over time. I plead guilty in this respect, though I should have known better. For having introduced the VAT and fine-tuned its base to create conditions for fiscal sustainability and economic efficiency, I was persuaded subsequently to zero-rate the supply of computer hardware and software to support the country's move to a higher level of information technology sophistication. They felt that the trade-off from zero-rating computers and software would generate greater growth than giving in this and that. I did so. It did not matter in the election. The base of the VAT in Barbados has since then been further weakened by the introduction of a wider and wider range of zero-rated exemptions. As Peter Toss said, everybody wants to go to heaven, but nobody wants to die. And in the Bahamas, you will find that people will call upon the government to zero-rate almost everything, only because the tax exists. It is to be expected as well that in the Bahamas there will be a clamor for any original base of the proposed VAT to be narrowed to support the perceived or expressed needs of sectors and groups. As far as possible, this should be resisted. A related problem that must be satisfactorily addressed with the introduction of the VAT is that of maintaining expenditure discipline. Because of its very nature, the VAT tends to introduce a higher level of buoyancy to the tax system. The growth in revenue will outstrip the growth of the GDP. There will be the appearance that the state is flush with cash and that extraordinary claims on the Treasury can therefore be made and sustained. Fiscal disorder can in consequence ensue, triggering in turn a need for adjustment to the VAT rate itself. In many instances in the Caribbean and elsewhere, where the original standard rate of the VAT, 15%, has subsequently been increased, it has not been due to the revenue underperformance of the tax. It has been due to the lack of or loss of expenditure control and discipline by members of the government and the cabinet. The recent experience regarding Barbados' present fiscal affairs is a classical case in point. It should also be borne in mind that the increase in the basic rate of the VAT after it has been introduced to support the growth in public expenditure can eventually prove to be counterproductive, for any tax that is set at too high a rate will suppress domestic demand and yield diminishing returns. In Barbados now, the VAT at 17.5% is generating less revenue than the VAT when it was 15%. To raise the tax too high to meet too large an expenditure to shrink the economy, and because the VAT is based upon consumption, you're going to shrink the revenue. In the final analysis, a value-added tax will only be successful in achieving the purposes of bringing efficiency, simplicity, and buoyancy to the tax regime, and helping to create the conditions for the sustained growth and development of the general economy, if it is allowed to be vested with and allowed to retain the special characteristics it must have. Those special characteristics is that a broad base, a relatively low standard rate, few exemptions, and a strong set of institutional arrangements to ensure high levels of compliance by everyone. As I said earlier, that the outcome and effect of the introduction of VAT in the Bahamas will depend not only on how the tax is designed, structured, and implemented, but also on the terms and conditions attendant on the Bahamas' accession to membership of the WTO. The two matters ideally should be addressed as a single undertaking from a conceptual and a planning perspective. It is beyond the purview of this subject of this suggestion that the tobacco thought to be able to Bahama for WTO. It is beyond the purview of this address to go into extensive discussion on matters relating to Bahamas' ascension to the WTO. But we wish to cite the following as matters requiring priority attention. First, the accession to membership of the WTO will require that the Bahamas, in respect of the trade in goods, agree to a program to reduce the existing levels of tariffs and to dismantle the non-tariff barriers. Its market access commitments can and will bear upon the base of the VAT and influence the extent of the revenue of VAT on services has to raise. It has therefore to be carefully negotiated with appropriate transitional arrangements agreed to in order to preempt fiscal and economic dislocation. And there's a book that I don't along with me on the modern VAT, which indicates that a formula for the reduction of tariffs now using the SWIFT formula is being applied. That would require your country that is now seeking to join the WTO to have to carry faster and deeper trade liberalization that the countries which joined about 20 years ago. But the fact is that everybody in Bahamas needs to become aware of and understand the formulas that will be required to be applied in reducing your import duties. And that is enough to scientifically measure what will be the base by how much will your dependence on revenues on import duties be, and how much really can you get from the seat tax on services. And may I also suggest to you that in addition to having a VAT unit, this was for necessary, and that they created a national trade negotiating mechanism, which effectively is. So, drawn from the best means in the public and private sector to systematically help us to negotiate every aspect of our WTO arrangement. And our national negotiating mechanism was headed by former Prime Minister Sir Harrison John, and it drew from the best in both the public and private sector. Negotiating with the WTO, as you know, a series of offers and requests and a lot of disciplines. And also Barbados and Barry, what we do with the same. They offer the private sector Barbados a tax concession to engage expertise to be able to negotiate with the WTO because it's new to their nature. And they didn't take it up. So I introduced expenditure line in the government's budget where it paid for a trade support group in the private sector Barbados so that the private sector itself can independently develop the capacity to participate in complex negotiations of WTO disputes. But that is the truth. The application of the principle that was dealt with the concept of reducing the level of duties. The application of the principle of national treatment across the board for enterprises producing commodities is also a matter to which the Bahamas will have to pay close attention in relation to this negotiation of the WTO. The WTO is based on three principles: national treatment, most favored nation, and use of tariffs. Under goods, the general agreement on tariffs and trade, you will be required to apply national treatment across the board. You cannot treat an enterprise or a good that is beginning different than you treat a non-national good or service. And in respect of goods, and there's a difference between the general agreement on trade, in tariffs and trade, and as it will come later, the gaps in the agreement on trade and services. It is also true, and this is where it comes to the Freeport part of the discussion, that the GATT makes provision for an agreement on subsidies and countervailing duties. This agreement has special relevance for countries which have special economic zones, such as you do. And this agreement has been the subject of a special World Bank policy research working paper entitled Implications of WTO Discipline for Special Economic Zones in Developing Countries by Peskov and Walkenhorst. And I've made a copy of this working paper available to your minister. I'm really shocked that everybody in this Freeport area is not familiar with this working paper. Under this agreement on subsidies and countervailing duties, direct subsidies that are contingent in law or fact on export performance of enterprises per se are prohibited. So, for example, if an enterprise is allowed to pay X, well, in Barbados, in our case, we have that problem. 95% of your profits are derived from exports. You pay a low rate of that, and if you're not exporting, that is said to distort international trade. And an export subsidy that is contingent only on export performance is a prohibitive subsidy under the GATT. However, the WTO agreement on subsidies and countervailing duties exclude from the definition of subsidies the core fiscal benefits provided typically by economic zones, exemptions from duties and taxes on goods imported or exported from such zones are not under WTO law regarded as subsidies. The World Bank study also indicates that in addition to direct subsidies on export performance, there are a number of government incentives related to the operation of special economic zones which will be under international law regarded as prohibitive subsidies. These include preferential transport and freight charges for export shipment, exemption of or remission of indirect taxes on export in excess of those on goods sold for domestic consumption, provision of export credit guarantees, and subsidies which are contingent on the use of domestic over imported goods, to name but a few. These matters need to be the subject of close and careful attention in the Bahamas. For Barbados is now faced the challenge of having to make its concession to the international business sector operating in our country that are contingent on export performance alone WTO compatible by 2015. The Bahamas may wish to learn from this experience. Happily for the Bahamas, there is no commensurate agreement relating to subsidies under the General Treaty on Trade in Services of the WTO. So under the GATT, you have the General Agreement and about 24 different smaller agreements, including one on subsidies. But the WTO has yet to develop an agreement in respect of the treatment of subsidies on services. Equally, in negotiating in relation to the WTO through the agreement on services, as a predominantly service-producing economy, the Bahamas will find that it has more leeway than under the GATT because there is no requirement for across-the-board national treatment to be applied in relation to the trade and services. Now, one thing is under the WTO, in relation to international trade issues, you have to give national treatment in respect of trade in goods, but there's no requirement to give national treatment in respect of trade in services. Nonetheless, the General Agreement in Trade in Services, and we have the mistake makes provision for the liberalization of trade in services across 12 sectors, over 150 subsectors, and through 4 modes of service delivery. The Bahamas will have to undertake careful research to negotiate the best terms of engagement across such a wide field of economic activity. For the terms and conditions under which the Bahamas accede to the WTO by way of its GATT commitment will bear heavily on the future prospects of the Bahamian economy more than any other country. We are coming to our service economy. You will have to negotiate the part of a general agreement in trade in services across 12 sectors, 155 subsectors, of 4 modes of service delivery, using the offer and request methodology. And to get that right will be a task for a country that has not been involved in the negotiation under the WTO this year. In the final analysis, the ultimate effect of the introduction of VAT and the accession of the Bahamas to membership of the WTO will be determined in large measure on whether a new spirit of governance can be brought to bear to develop a consensus on the critical aspects of these 2 matters, the VAT and the WTO. Consensus that can best promote this country's best interests. The building of a national consensus on these 2 matters goes beyond the need for the adoption and support for some technical decisions based only on empirical findings. It requires that where common ground exists on the stated position of otherwise contending parties, such common ground must be recognized and agreed to be held. But above all, it requires recognition of the fact that if all agree that you cannot stand where you are, then all should simply have to agree that you have to move. This is the challenge facing all concerned in the Bahamas. It is a common challenge from whose solution none should reside. The decisions which have to be taken by the government and the people of the Bahamas in the near future will therefore, in all probability, change the structure of this economy forever. It will be a great cause, but great causes are never won by doubtful people, and it's a cause which I'm sure the government and the people of the Bahamas are more than capable of doing, and I'm obliged to. You campaign, Mary Malcolm, for any errors in the Constitution because he gave me a few years ready. I welcome now for the question. No question? Yeah, great. But look, would somebody bring up Mr. England because they used to sit inside of the Prime Minister and they never heard about who was about feisty pounds in their hand. Yes, sir.
Could you comment on the process by which the administration of your VAT actually circulates post-implementation? If you transition the customs department from VAT to the new organization, how is that transition happening?
Look, you have to be like an organization. Not only for purposes of administration, but from the very outset. Right now in the Bahamas is indeed, as it would happen before the introduction of value-added tax, there has to be a deliberate program of public education and public relations. This is a new tax. There will be a sense of dread, as there always is in respect of things that are in the realm of the unknown. So you have to start with a deliberate decision. Have a specialized unit to do it from the ground up. And those persons can't have their issues complicated by being a specialist in something else. They have to be specialists in the value-added tax, so you must have a special unit. There are people who are familiar with international tax law also involved. But I believe that in correctly saying that people working in customs, their largest issues have to do with applying international trade rules in respect of valuation, generally to make sure that people are not under-invoicing or whatever else to defraud the treasury. But the value-added tax is going to have people, for example, have to understand these arrangements and how you apply that for the purposes of taxes and a whole range of other matters. So you must begin by having, even though the VAT unit fell under the customs department, specialized unit with a separate director of that special and specialist staff who are not necessarily transplant or advisory recall in any respect persons who used to work in the customs. Secondly, the process of implementing the value-added tax, as it says, is about bringing something new to bear. And newness is its own problem. And people have to be given the opportunity to both understand what is proposed and to be able to see the provisions of the law and be responsive to them, but more especially so the provisions of the regulations of the VAT. As you are aware, of course, in almost every jurisdiction, you have a body of statute law, and then you have regulations pursuant to the law. You will find that the regulations, well pursuant to the law itself, will be as important in what happens with the VAT as anything else. And that there must be circulation and full discussion of both the law as well as the regulations pursuant thereto, and that both should be in place and agreed to by the country on the day that the VAT itself becomes effective. We really can't have a VAT without regulations, and the regulations have to be seen and gone through by everybody, and people must understand what is expected of them.
then there's going to be for a registration process. It would be foolhardy for you in the Bahamas to want to try to register everybody for the VAT. The experience in almost every country is that only a small collection of the individuals in a country really big VAT. And you don't want to make life miserable for people by having people who don't need, who you don't need to be into the net, brought into the net. But you really must pay attention to making sure that people who will become eligible to the VAT themselves undergo the most intense training, because the VAT will require businesses to apply accounting techniques in respect of its relationship to government departments that they have never before been required to do. In the case of depending on import duties, the customs. Now, businesses will have to have accounting systems where they can report the tax that they pay on inputs, because they can claim the tax paid on inputs against as credits against the tax that they charge on the outputs. So the value-added tax is going to cause a complete conversion and sea change in the accounting practices applied by all the businesses subject to it. And the training of enterprises and the accounting divisions to enable them to understand it and to be able to adopt the pre-existing accounting practices to it, and decide whether the VAT is successful or not. And in our case, we had a long lead up. I became Prime Minister in 1994. The value-added tax was intended to be applied in 1995. January says this country is not ready for this. Did research first of all, and you had to satisfy that. I had, well, in government, you have to make the best decision based on the best information. And ministers are not magicians. The question always is, does this stand the test of reasonableness? And you make the best decisions based upon important evidence that allows you to see that this stands the test of reason. So we also not only have persons presenting techniques to that, but I brought together a team to do empirical studies for me, estimate, simulate the thing. What is the impact of that on prices, and what would happen if you the coincidence of or 11 taxes with that? What would happen to prices? Because that's one issue they have to face. And then once they're removed, how should prices drop? What will be the impact of that? And simulate it. Because we can do it. You drop it in import duties, you're introducing output tax. What will be the input the tax on the productive sectors? And after we had done that, and part of the effort of introducing that was to put the thing on pause to do that and get that right. Because believe me, there is no option for failure in getting the VAT right. Getting the VAT in place is like docking two aircrafts in space. There's not one chance. And if it messed up, there's no way in which society is going to have any confidence in anything at all. So get that right. And we carried a program of extensive public education. The section of the restricted sector was, as you know, inspired by greed that made the task heavier. And not here to criticize anybody in the Bahamas, but it's all the same kind of tendency. A person put out a full page ad in the Barbados newspapers. Hurricane VAT is about to hit. No, of course, as you would appreciate, my tongue was sharpened for him on both sides. Because I describe him as being unpatriotic in terms that would have offended his parents. But there's things that you have to do. And there's only, and I can't impress upon you how good a thing this can be, but how difficult it is to do. And the hardest part about it is to take out of the minds of the people the fear of the unknown, especially those who will now have to pay VAT on services that you don't have to pay tax on now. And therefore you have to be given them assurances that you are sensitive to their considerations. But in fact, analysis, the government and the private sector and others have to be working together. And may stress that all of the information that the government has, all of the regulations, all the drafts have to be made available to the public. I'm saying that because I didn't come here to criticize. But everything 8 days within which to both do research and to prepare the speech. Perhaps the delinquency is on my part, but I did not find a lot of studies about the Bahamian evaluation of tax on revenue. In fact, I'm not trying to criticize people because people say that I'm a friend of the income, which I am. And I'm going to get to say when I come back, which I would love to see, but that's not the point. And that's not the point. The point is that I look for the studies because I went to this concern. You have a study lab that's on the impact of it. You simulate the VAT, you can do it. But you can then you will have the asset in relation to trade data. And it's easy therefore for you because your fiscal system depends upon trade data. And you can simulate what would be the implication for prices or production costs by varying rates and whatever else. But that work has to be done. And then we got a special study on the VAT and the tourism sector. Because then, how do you generate growth? The leading sector must lead. And the only thing that you don't want is to have a value-added tax that stymies your growth by putting your leading sector in a condition where it cannot lead. So, the thing is also true, of course, that it was in politics. Good politics too. But if you, how do you get the public to buy in? If the leading sector of the country say, but this is a good thing for the country, the people who tend more believe the leading sector than the prime minister. So I had to get the tourism sector on my side anyhow. And then we said, wow, this is going to save us $7 million. What a wonderful thing. And they said it for me. But you really do have to make sure that the VAT leads to growth. Because if there's not an early harvest in respect of the growth of the economy from the VAT, the clamor for changing it will arise. But a dedicated unit in place, intensive studies, deepest possible sharing of information, subjecting of the proposed legislation and regulations to intensive public discussion and refinement. And you must not be afraid of taking input from stakeholders, and since this makes sense, then you change my proposal. All that needs to be done before the date of the introduction. And in our case, as I said, I became Prime Minister in September 94. The VAT was to be implemented in January 1st. I reviewed it. Well, I supported the VAT in opposition. I reviewed it, didn't feel that which the cabinet must do, we will do, make the best decisions on the basis of the best information. I felt that the private sector was not ready. So if the cabinet is not ready, and the private sector is not ready, then we'll do it. So I said, put this on pause for 2 years, get it ready. And then when they introduced it, as I said, silkiness in the 20th country, gave me 9 months. Because this is not a leak in the dark, but this is new. Let me prove it first. And if there's amendments to come, I'll amend them by adjusting the plan. The politicians have a way of doing the right things. I had it together all to make sure that there was no VAT on things like computer sardines and everything. But if I had introduced the VAT without those, somebody would say, but they're taking off something else. So I introduced the VAT with those things in, and then took them off. Because we knew that we were going to be called for in any case. And you have to build confidence. You got the impression that never we get president. But you have to boost confidence in it, because people will want something, and they won't be able to identify with what the government is doing. And if you have nothing to already introduce it, they're going to frustrate it. Yes, sir. Yeah, I'm not going to give a short answer because I'm not coming back. I don't know how to inside them and choose.
You mentioned very narrow revenues. You talked about what others as in addition to that. What percentage of the revenue, government revenue is that?
It makes it about 800 million on a one third. And typically in most countries, it does. But remember, this in the Barbados case, we also have a personal income tax and tax on corporation, as well as the import duties. So I'm not holding that the Barbados case as that for you because I was fascinated in Europe with labor, and I'm not getting I think this is the VAT. Let us evaluate the VAT as an alternative to the introduction of income tax and corporation tax. In Barbados, that was not our issue. Our issue is how can we structure the VAT, the nutrition tax alongside income taxes and corporation tax. And I would have hoped that I started the discussion and challenged you to question, will you all forever be in a position to have the same tax structure as colonies when we're an independent country? Bermuda and British Virgin Islands and others have another country to look after part of the public expenditure that you incur, but you don't have a country to look after. So that their tax structure reflects their status as colonies. Your expenditure structure has come on board to reflect your status as an independent nation. And that expenditure is likely to grow and to grow and to grow as you take on especially challenges such as the fight against money laundering, global warming, and a whole lot of new challenges that imposes new costs on the treasury. So it never occurred to me when I was discussing that income tax because it was too broad. But you have to go to income tax. So good luck to you. Yes, madam. I have a copy of it. I mean, whereby? I have, it is there? Yes, I gave a copy to the. Go right ahead. It is implications of WTO participants for special economic zones in developing countries. It is a World Bank policy research paper of 2009. But you can get it from the website. Go ahead. It's exempt. Yeah. Ordinarily, you know, it didn't pay exempt surveys and zero rating. The exempt, the institution will not be able to pay no taxes on the service, but will not be able to offset the input tax against the VAT, so they can't claim a fund. So exempt institutions will have to absorb the input taxes. The financial sector, for example, financial intermediation is an exempt service. So banks selling a service to the domestic economy will not charge services back on their services because what are they selling? They're selling savings and investment. I do this tax for something. You don't tax a financial services, you don't tax education. But the institutions will have to absorb any tax on inputs. And that is what an exempt surplus is. A zero-rated entity, however, charges no tax on its activities, but is able to claim credit for any tax paid on input. So the export sectors of the Bahamian economy will benefit because you don't tax. Other jurisdictions, principally international trade, do not tax exports, but they can be able to claim credit credit for taxes on inputs, so they will be getting refunds. One of the issues in respect of the administration of the VAT Code is the split between the company that they entitled to refunds. But if the government runs into cash flow problems and cannot give back refunds to the VAT in a timely fashion, they will frustrate the intention of zero rating, and their jurisdiction with that is not the case. Yes, right. So 2 months, and the experience people are allowed something to carry credits. They won't be able to offset against credit in the next. They don't hold for ready, but 2 months. And you have reporting every 2 months. But they cannot be refunds to the export sector. That's the problem. Because if the government is short of cash, it's going to tell people late. Yes, sir.
Lately, there have been some giving promotions paid about that.
But they always happen.
How would government go about keeping that?
The value-added tax, I believe, brings a tremendous benefit to our society. That people selling to others have to give invoices, and there's a record. So I buy from you, even if you to produce the tax that I pay on my input from you, I keep a record, and I have to claim the tax on inputs as a credit against the tax on the output that I sell. So that the tax, the use of the credit invoice method by itself should require entities registered under the VAT to be able to show accurate information, because they're two independent entities filling out invoices. The supplier shows the invoice, will show the tax that he charges you on the inputs he buy from him, and that's why the record that goes to the value-added tax. So it's less easy than other ways to be fraudulent. We have 2 sets of invoices from 2 independent entities coming in relation to determination of valuations. It is not like you have, as I suspect we're talking about, where people invoice imports, under-invoice imports, with the intention of avoiding the ability to tax. You have, it is invoice-based, and it's easy to verify. We have 2 sets of independently generated information in support of the same application. Next, yes, his name. Owen is his name.
In Barbados, did you ever have a legal Bahamas and economic change in Freeport?
You don't. But answer, because one of the big issues in respect of your membership of the WTO is going to be issues in respect to the operation of reasons. There are many countries that have reasons, and I suspect it will be okay, because WTO rules says, and you would have read the law, that there are 2 types of subsidies: subsidies on exports and domestic subsidies. An export subsidy that gives an enterprise a concession only on the basis of the export performance is prohibited, because the WTO is there not to tell her many things domestically, but you should not apply policies that distort international transactions. So in Barbados, for example, our Income Tax Act says that if you sell a service abroad or go abroad, you can rebate 95% of the profits from the sale of that service, and you could, and you pay tax only on 5%, so 20% or 5% means that you have no rate. Now that has been judged to be an export subsidy within the meaning of Article 27.4 of the agreement on things. And what you have to make it, everybody can get the same thing. So export subsidy, I don't think you have export subsidies in that meaning. In relation to domestic subsidies, the question is whether they are actionable or not actionable. And your import duties and the absence of taxes on exports generally are low. And this the trade are not regarded as actionable subsidies within the meaning of international trade law. But there are other subsidies that if you give export credit guarantees or special payment arrangements for pre-shipment and post-shipment, or if you have anything that creates a discrimination, then that is against law. And the WTO is easy to understand. There's two principles. One, most favored nation, that you treat every entity in the same way in international transactions. So you don't treat Barbados different, you treat together. You must have the same rules applying to each other. And two, that you extend national treatment. That you cannot have, in relation to schools, an arrangement where a Bahamian enterprise is treated differently from a foreign enterprise. Now, as I said, under the trade in services, that rule is not wholesale applied, but it applies in the case of trade in goods. And you will have to look at your agreements in respect of your free zone to see if there are any actionable subsidies. Because once you join, then you will have to, and it will be challenged. In the case of Barbados, Barbados now has the largest number of WTO incompatible subsidies of any of the countries that are being challenged under the application of Article 27.4 of the Agreement of Trade and Services. And they've been given until 2015 to make them compatible. And clearly, it has to be done because people, as you know, people do not allow you to subsidize your exports to sell to them because it distorts their own domestic economic activities. So you have to go through your law. But I suspect that most of your matters are will be okay. Now, it's also true, of course, that the WTO agreement on subsidies only apply to measures pursued by the state. Actions taken by private investors in a free zone area are not subject to challenge under the WTO. So what private entities do in the free zone is their business. What is the subject of the application of international trade law is if the government, by a special measure, do something that is in conflict with international trade law in relation to most favored nation application or national treatment. I said I have not had the time to go through your law. I am not a lawyer, but I believe that you will have to look at it because it correlates. And there are other Caribbean countries that have now to amend their incentive legislation in respect of fiscal incentives. As you know, countries in the Caribbean give tax holidays, and after the tax holidays expired, you could continue to get support if a proportion of your profits came from exports. And that's what many Caribbean countries function. That was in the best of 1973. That has now been judged to be incompatible with the WTO rules that says you cannot have an incentive that is based upon export performance only. And most Caribbean countries now have to readjust that export incentives to make it WTO compatible. Last question, I'm concerned.
One last question, and that is, I now remember reading that we were talking about the economic development zones in developing countries.
Yes.
My question is, are we still, as the Bahamas, because of our standard of living, considered a developing country?
Well, international trade law has a definition for developing that is based on income threshold. Our countries below a certain income of $1,000 are exempted from the ordinary application of international trade rules. So that you, like Barbados, you will not be regarded as a developing countries per se. The WTO has a problem of special and differential treatment for the poorest countries, and something that we do not have to apply the same rules in respect of your enterprises and whatever as other countries, but only the income level. A great fight that the Bahamas will join us in is that we have also been credit that the WO to understand that there is a need for special and differential treatment for countries that are developing countries but are not classed as small island economies. So I trust that when you join the WTO that you will join us in this endeavor. And I thank God for being such patient. Yes, sir. Quickly.
Prime Minister, thank you. First of all,
Owen is in him.
okay, Owen, delighted that you gave me that liberty. I want to first thank the chamber for inviting you, and I also want to congratulate you for the short period of time putting your presentation together. I think we all would agree that you did a great job. I want to shift the questions a little bit. You mentioned in your presentation the alarming debt and deficit of the Bahamas.
It is alarming. And who a politician going for you to put in my mouth words that I cannot recall and use.
Your presentation gave me an alarming concern.
No, and can I therefore calm your nerves, sir?
Let me ask the question.
But I want to deal with it. But you go ahead, sir.
The comment you made about the debt and deficit of the Bahamas in comparison to other regions, other countries in the region was comparable. But you mentioned that if it continued on this trend, that it would become very alarming. My question is, what ideas, what suggestions, what advice would you make in order for us to avoid getting to that point, which none of us want to get?
Fine, and let me, since this could become what this conference comes to remember for, that if you had to make Bahamas become a member of the European Union, there will be a rule that you have an index that you could not have a deficit of more than 60% of the GDP and join. Your deficit is now such that Bahamas could in principle join the European Union. It is not an outrageous deficit to GDP. The countries in the OECS, some of them have some of the highest ratio of debt to GDP anywhere in the world. And among Caribbean countries are to be found countries with some of the highest ratio of debt to GDP in the world. St. Kitts had a debt to GDP at once of 200%. Now, we're going to say, well, because Japan has one too, of 20%. And Italy has a big, and Singapore has a debt to GDP of 110%. But the point about yours is not so much in the existing level, but the trajectory. It is going in the wrong direction. And it is going in the wrong direction because I believe that the expenditures of the and then this whole state, they give me perspective that your tax structure has been designed to take account of the fact that you're competing with Caymans, and their colonies, and they don't charge tax in England. So you have a tax structure that's your economy. But your expenditure structure has systematically been expanded to carry obligations of independence. So the things that you don't have to pay for, that were not there as an expenditure requirement, meaning we're not that independent country. So that, and you will find that that is true of most of us says that become independent. I believe that a country like St. Kitts, 60,000 people, how would you constitute a society out of St. Kitts and pay for it? To pay for a civil service and an army and a defense force, it's hard. And therefore it's not necessarily mismanagement that explains why among some of the smallest countries in the world, you have some of the highest ratio of debt to GDP. The key is not getting it under control. And the hardest thing to do, as you know, in democracy, is to let people come to enjoy entitlement to services by the state, and then ask them to give it up. They almost can't get it done. So then you all have acts at early stage to make sure, and this really want very strong, aggressive by ministers, that ministers' behavior do not trespass dangerously on matters of indiscipline. That ministers have to understand that the fiscal rules. And it starts there. We don't get ourselves involved in expenditure problems by international recession. It is deliberate spending decisions by people who believe that they have to please constituents, even if you can't find the money to pay for it, don't let it get out of control. And the other matter, of course, is that at some stage, and after we got, and again, not coming to get involved in controversy with you, you will have to make a judgment as to whether, even with the adjustment of the VAT, that your tax base is still relevant from 100%. I'm not answering that question today, but all I can tell you is that if a country wants to have high rates, high levels of services enjoyed by the society, somebody has to pay for it. And that you will have to decide in what is either the tax base or the combination range of services that you make your people feel that they have an entitlement to. And it's a behavior decision that is in the realm of Psalm 137. You know what that says? Lord, my eyes are not lofty, nor is my heart haughty, neither do I exercise myself in great matters, nor things that are too high for me. And that's a good word.
Thank you, Mr. Arthur. I'm going to ask past Vice President of the Chamber, Kerry Lemon, who gave us our first lesson on VAT, to give a vote of thanks to Mr. Arthur on our behalf.
Mr. Owen, Honourable Owen Arthur. I had the pleasure of having dinner with him last night, so it was most informative. We would like to thank you first of all to say that it's been an honour and a pleasure to have you speak to us today and give us such an informative and impartial speech on that, and in particular WTO, as we really need also as a country to focus on WTO as well. And I'm so glad you put the two together for us. And on behalf of the Grand Bahama Chamber of Commerce, we would like to give you this plaque as a very small token of our appreciation. We really, really appreciate it. Thank you very much.
And I thank you for this gesture, and I'm asking you not to believe your lying eyes. This is not a plaque, it is a vial of pink sand for me.